all, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and the closing trades for now are pretty steady despite the volatility that we have been seeing for the last few days. Today it's been very muted around that 21,900 mark. Though there are pockets that deserve mention, three pockets which are outperforming clearly is insurance. So names like HDFC Life, etc. are perking up on account of that GST rationalization that the street is expecting. At least that is the recommendation made. You also have some of the other sectors like oil and gas which are powering ahead, whether it's a BPCL, a Petronet, LNG, and even other names like HPCL, IOCL. Those are the pockets which are firing away in the trading session. Apart from that, IT, of course, Nifty IT index is sitting at 52-week high. You have HCL Tech, 4% gain coming in there. TCS is high by 4%. Over the last couple of days, there have been a few deal wins for the likes of TCS. That supported the sentiment. Plus, the brokerage notes, at least on the likes of Wipro, etc., have been positive. So we are watching out for that. But one pocket which is clearly on the back foot, Aisha, is banks. They continue to bleed. Today as well, it's the private banks which are coming under pressure. PSU banking names also very muted in the trading session.
Absolutely. As I see it, SBI is absolutely flat. This Kotak Axis down about nearly 1% or so. And then, of course, some of the blue chips as well have not really participated today. Reliance is definitely stalled. It's down about nearly 0.5% or so. ICICI Bank, well, you did see that pickup coming in, and we'll tell you why a bunch of stocks within the banking pack are in focus. HDFC Group is looking to up their stake in some of these. But that said, HDFC Bank as well, no material move once again. And then, of course, no blue chip support coming in from a Reliance or an IDC, which is also down about 1.5%. Today has really been all about news flow. Firstly, with that sizable block deal that you saw on Paytm, some bottom fishing coming in there. And after many days, finally, you saw a bit of a green tick come in on Paytm, still holding up 4.25% or so as we speak right now. And then, of course, it was PB Fintech as well, which came under the scanner. There were reports doing the rounds that perhaps income tax survey at Paisa Bazaar marketing is currently underway. And then the company categorically said that there is no new update in the said matter. This is what was reported back in December last year. And since then, there has been no material update, so to speak. Petronet LNG backed a new LNG contract. That's another stock which is in focus. And then, of course, a couple of positive earnings coming in from the likes of an Akzo Nobel, Go Fashion, Ajmer Realty or so. They have been quite okay. BSE, irrespective of the dhamaka earnings it turned out to be, and we'll try and address that in just a bit. It started off in the positive. From there, it's drifted to the session lows right now. I think one of the brokerages said that it was priced to perfection, which is why they were downgrading the stock, and that's clearly rubbing off right now. It's down about almost 4% as we speak. But let's take stock of what the rest of the market is up to. While energy names and IT are holding up, Kunal, what do you make of the fragmented nature of the market right now? The Nifty Bank doing its own thing and the rest of the index the other.
Yeah, so this is what I think we were discussing yesterday also, that the markets on the way up would probably get a lot of impediments in terms of sectors. So the momentum would be a lot more staggered for the indices, and I think that's where one should probably try and position. So when you are expecting that the index would remain into a range, say for example a 300-400 point range broadly for the Nifty, then in that regards you don't look out for more of trending stocks. You don't look to buy the breakouts, but you tend to buy those stocks which are coming back into an support territory, and then you look out for reversals on the upside. So I would probably believe that that's just a minor tweak in terms of strategy. For example, yesterday you had the likes of Info Edge, Maruti, which were which closed at their day's low. Today these stocks have made a fresh swing high for themselves. So that's a classical change of strategy which one has to adopt in this kind of a market. Net, I would still believe that we are trading into a range 22,100 on the upside broadly as a resistance and 21,700 as a support for the Nifty.
In fact, the other thing which I'm gathering from the street is, Aisha, that the non-banking part of the interest rate sensitive, which is auto and realty, are doing very well in trade. And the belief on the street is that this policy, of course, there's nothing much is expected on the rate front, but actually when the governor gives out his FY25 outlook, which is the platform when he'll do that, it is going to be likelihood of a very dovish kind of a policy, because this comes right after a union budget platform where very disinflationary kind of borrowing number, lower borrowing number, and also of course the fiscal deficit target was better than what the street is estimating. So people think that it is going to be a dovish policy, and that's why also some covering of short position. And look at, banks may not be participating, but look at stocks like mid-tier, Ajmera of the world, Man Infra of the world. Look at Jamna Auto, CV, pure CV play, gaining very sharply in trade. Capital goods like Triveni, Maruti, all of them. So that section of the market is excited. But Anshul Sehgal is joining us now to talk more about earnings and the market. Anshul, afternoon. Thank you so much for your time. One part of the PSU energy, PSU pack is the energy basket, and within them, OMCs may have done very well. All right, I should just hold that thought. We'll just come back to you in a minute. Airtel management is talking to analysts right now in the conference call. We'll just cut it.
Deliver for them a brilliant experience, put digital at the core of all we do, and strip out waste. The company generated operating free cash flows of just under 7,250 crores for India, despite a front-loaded capex. Capex for the quarter was 7,750 crores. And as I've mentioned, our investments are focused on 5G, rural expansion, fiber deployment, and data centers. Given our strong cash generation, net debt to EBITDA for India continues to improve every quarter and now stands at 2.91 versus 3.08 in quarter two. We paid another tranche of 8,325 crores of high-cost DoT debt. In this fiscal, we prepaid over 16,349 crores of high-cost DoT debt. A quick update on each of our segments. In mobility, 4G net adds momentum was strong at 7.4 million. Postpaid net adds was steady at 0.9 million, the third consecutive quarter of more than 25% of total net adds. ARPU was at 208 rupees versus 203 in quarter 2, 2024. That's a 5 rupee increase. And this improvement is really due to three key drivers that continue to kick in: feature phone to smartphone upgrades, prepaid to postpaid upgrades, and driving share of wallet through a combination of data monetization and international roaming. Our premiumization agenda to upgrade customers to higher value plans has been working well and contributing to ARPU growth in the absence of tariff hikes. Our 5G coverage expansion is on track despite no monetization. Growing 5G shipments are reflected in our rapidly growing 5G base as well. Finally, we continue to deliver strong competitive growth, further increasing revenue market share, a key barometer of our performance in the marketplace. Turning to broadband, we saw some moderation in net adds to 3.6 lakhs. This was on account of the peel back of the entry-level plan at 199 rupees. So we've discontinued that plan, and that had some impact, which is a healthy impact because the ARPUs on the acquisition side are now improving. We're now present in 1,267 cities, up from 1,140 cities last year in the same quarter. We added almost 1.5 million home passes, given the momentum we are seeing in this business. Airtel Black, our converged offering, is seeing strong momentum. More than 40% in fact, 47% of net adds are now on Airtel Black plans. This converged plan helps us offer customers more than one service of Airtel. It reduces churn, gives a fillip to average revenue per account. We continue to strengthen our content partnerships and make Xstream a mainstay with more than 20 OTT apps on the single platform. We recently added AHA, Alt Balaji, Fan Code, and Playflix on Xstream Play. Xstream Play crossed 5 million paid customers and continues to be the fastest growing OTT aggregator in the country. On the DTH business, we added 388,000 customers. This is the highest net adds that we've seen in the last 12 quarters. Revenue growth was driven by both customer adds and ARPU increase.
Okay, so that's Bharti management talking about a good set of numbers. I will try and get back once some more relevant part, or perhaps some mention on tariffs start coming in. Anshul is here. Anshul, I want to talk to you about some of the upstream oil and gas companies and Petronet LNG. They've just told the exchanges today that their deal on LNG supplies with Qatar will be beyond 28. Stock shot up 6%. Oil India and ONGC both commented on production volumes. I don't remember the last time I heard something on production volumes from ONGC talking about 10% volume growth. Do you see value in both these stocks?
Hi, Ajay. Thanks for having me. Good afternoon. So, if you look at the makeup of the markets in India, while the index was trading at 19 and a half times forward earnings, but look at an Oil India or an ONGC, they were trading at 5 or 6 times price to earnings. So, a significant discount to the index. And this was largely because of ESG policies, etc., of global investors, which led to these upstream oil companies trading significantly cheap. And then if you spoke with the analysts on the street, they would tell you that they were building in, say, between $60 and $65 as long-term oil price while doing the DCF of these companies. Clearly, oil prices were higher than that for an extended period of time. And this sort of an anomaly led to the stock prices being where they are. Now, that really gave you an opportunity in our judgment. And in the last 2 months, say, an Oil India is up from 300 to now 450. Now, even after moving to this kind of a level, these companies trade at somewhere close to 3 to 4% dividend yield, and maybe up from 3 times or 4 times price to earnings to now 6 times price to earnings or thereabouts. Now, of course, the easy money has been made, but clearly there is interest which has come in into these names. As we saw in the case of cigarette and tobacco manufacturers, when the anti-ESG trade started playing out, they had really no top, and they rallied for a very extended period of time. You could well see that here. Although I would just say that now putting monies in these names is not as easy as it was, say, 2, 3 months back. However, there may be some money left on the table still.
Money left on the table. That's the big question everybody wants answered. But what about the IT space as a whole as well? But actually, before that, let me take it across to Somit to get a sense on Petronet LNG, because that stock is firing away in the trading session. It's one of the top F&O gainers. Somit, tell us what's the importance of this long-term deal that they're likely to sign with Qatar?
Well, Petronet remains in focus on the top F&O gainers in trade, and this is after reports are suggesting that the company might be nearing to sign a long-term LNG deal with Qatar for at least the next 10 years. Now, as per reports, the company might be signing a 7.5 million tons per annum of LNG deal for next 10 years. The current deal is also of the similar quantity and is expiring on 2028. So this new deal will be an extension to the same. Now, as per the current deal, Petronet imports nearly 7.5 million tons of LNG every year at a price of around 12.67% of the crude prices, which means that if crude prices are trading around $100 per barrel, then the LNG price is at around $12.67 per MMBTU, and if crude prices are trading around $80 per barrel level, then the LNG prices are at around $10.1 per MMBTU. Now, apart from this slope of 12.67, there's a fixed cost of around $0.52 per MMBTU, and also the shipping is on FOB basis, which is free on board, which means that shipping needs to be taken care of by Petronet. Now, as per the current deal, the slope is expected to be on the lower side, around 12 to 12.5% of the crude prices. There is no fixed cost, and the shipping is DES basis, which means that it is delivered ex-ship basis, which means that shipping will be taken care of by the supplier and not by the buyer, which in this case is Petronet. Now, as per analysts, because of this new term, the cost of this LNG is expected to be lower by around $1 per MMBTU going forwards, which is positive for Petronet, and also Petronet will get secure gas supply for India, which will be a big positive given the fact that gas demand in India is expected to increase going forward because of more demand coming in not only from the city gas distribution companies but also from power plants going forward. So keep an eye out for Petronet in trade.
Okay, so that's about Petronet LNG. But Naresh, if I can bring you on the conversation about the IT companies, they are rallying hard today. Which is your top bet? Because today, even the frontline names as well as mid caps, they're all firing away.
So, in terms of, say, a catch-up, Tech Mahindra is something which is left to catch up the whole sector as such. So that is where the risk reward is very interesting. The stock, once it breaks out above 1400, it could see a much bigger move. Then secondly, on dips, it would be TCS because the stock is finally in the large cap category, the first one to actually hit a new all-time high. We've not seen this happen with Infosys. When this happened with HCL Tech, we've seen how it has continued to rally after that breakout above the 1400 mark. So out here, I would be looking out for TCS on dips and Tech Mahindra, which looks the most promising, which has not caught up with the rest of the market.
Take coming in on what the IT stocks are currently up to. Anisha, there was a report as well, right, on Wipro?
Correct.
Yeah.
So Macquarie has actually come out with a sales note and they've upped the target by 14% to 570. Now they are calling it a bit of a dark horse and alpha idea, because their topic remains HCL Tech, but there are two turnaround stories that everybody wants to play in the IT sector, and that's Tech Mahindra as well as Wipro. Their take is that Wipro is better placed than Tech Mahindra because yes, people have bet a lot in terms of the leadership change that has happened, but for Wipro there are fundamentals at play in terms of the margin turnaround as well as the story when it comes to the Capco acquisition, which is expected to ramp up. So those things should work out well, and definitely that stock is holding up in the green with a gain of around 4%. But separately in terms of the market, clearly what is losing out today is some of those specific names like Suven Pharma, Policy Bazaar is under pressure, plus some other names. We're talking about insurance as a sector, and we'll get our colleague Anurag to talk to us about what exactly is being tabled in the parliament. But Anshul, the murmurs are in the positive direction that they're looking at rationalizing GST. But apart from these one-off cases, fundamentally as a business, would you look at investing into insurance for a long-term play?
Clearly, that is, as also some of the stock prices of some companies have shown in recent times, both on the general side as also on the life side. This is a space which has tailwinds. It has consolidated over a long period of time. And the market opportunity remains so large that the upside potential in terms of volumes as also profitability for these companies is quite significant. Now, within that, there will be certain companies which have headwinds. For instance, there is a life company which is run by a bank, and the bank itself doesn't sell its products. Now, that leads to some sort of a headwind for this company in terms of growth, and of course that translates into margin contraction as well, which is why you have less interest from the market in this name. But other than that, this space has clearly a lot of tailwinds. Even from the government side, this is a very nascent sector, very little sort of interest that the general public has had in insurance. They need to support this sector, and which is why regulation which is adverse to this sector can be least expected. And in our judgment, which is why over a long period of time, this is a sector which will create value.
That's the take coming in on the insurance plays. I just want to revisit one of the names, that's Yes Bank. Now, Yes Bank has really been on a tear, and I think at the high point of the day today, the stock was up a solid 9.5% and it's gained the maximum it has in about almost 9 months. Actually, not just today, but if you were to bring up the last 6-month performance as well, Yes Bank would have had some solid gains for itself. Today, of course, the trading volumes on the stock are triple the average at this time of the day that you typically see on a Yes Bank. And yes, I was right, not just in the last 6 months, in the last 1 year also it's gapped up or jumped up about almost 50-odd%. Reason being that the central bank has now given its approval to the HDFC group to increase their stake up to 9.5% in Yes Bank. Of course, there are 5 other names, but you're seeing the biggest move come in on Yes Bank out of the same. But Anshul, I mean, Yes Bank kind of stories aside, what's leading to at-large underperformance from private banks as a cluster?
Hi, Aisha. We need to see this in perspective and go back, say, 7-8 years to see the trend in the overall banking sector. Now, what we witnessed, say, 2015 onwards, is that certain segments of banks which were corporate leaning, those segments really faced headwinds in terms of NPAs, and as a result of that growth, they really did not go out and grow. On the other hand, what we witnessed is the private sector banks, particularly, say, HDFC, Kotak, and the likes, these were more retail-oriented, and hence we witnessed significant growth and not so much problem on the NPA side coming in from these banks. As a result, the investor community actually concentrated towards these banks and invested significantly. Multiples went up quite tremendously. I mean, from 1.5, 2 times book, they went to as high as 4.5 times book. And since 2020, 2021, we've seen that PSU banks and other corporate leaning banks have seen a peak on NPAs. NPAs are coming down, and as a result, they are going out and going for growth. And in this growth, these monies which were parked in private sector banks are shifting towards PSU and corporate leaning banks. That trend is still playing out. A large amount of sort of consolidation has played out in private sector banks. At some point, valuations will have caught up with earnings, and these will become interesting. But that trend is still playing out. These remain very good banks. They will continue to take market share, but it's just a valuations play at this time. Give it some more time, and I think that private banks will be back in focus, and interest will return to them.
Okay. The other area I want to talk to you about, Anshul, is Triveni Turbines came out with their numbers today. A very strong set of numbers, and the stock also almost it's locked on 20% upper circuit now. ISGEC, pull up that name also. The numbers would be out next week, and it's gaining smartly ahead of the numbers. This mid-tier engineering space, Anshul, what are your thoughts there? Which are the ones you like?
Again, these are segments, Ajay, where for nearly a 10-year period, India had a complete hiatus on capex investment within the country. The famous dialogue of the erstwhile Prime Minister was, which is Manmohan Singh, his dialogue was that, or his commentary was that we should we should get back animal spirits into the economy. Now, animal spirits is a function of a capex which happens in the economy or investments which happen, and that percolates down into consumption. Now, at that time, really, there was no capex happening, and there was a lot of cleanup that happened subsequently in the system. That capex is coming back with gusto now, and as a result, order books are filling up. The fight for margins, which was quite significant earlier because there were no orders and people were fighting on price to get orders. Now that fight is behind many of these companies, so margins are expanding as a result. And many of these companies are really high-tech companies. They have significant competencies in many areas. For instance, the company that you mentioned, both companies that you mentioned, Triveni Turbines as also ISGEC, are highly competent in their significant spaces, in their their own spaces. And so orders are coming in, margins are expanding, they are going out for exports. We think that this is going to be a decade for these companies. It's not a 1 quarter, 2 quarter thing. It's going to be a decade. And sitting in these investments and sitting put for the long term is going to make you tremendous amounts of money, is our judgment.
So that's the view coming in on some of these capex plays. But take a look at AkzoNobel as well. The company reported its numbers, and that stock is doing very well for itself. It's up around 10%. It wasn't a big jump in revenue. The revenue was just up around 5%, but the profitability is something which has done very well. It's a double-digit growth in volumes that the company has reported, at least in the quarter gone by. And the coatings and B2B segment has sustained the robust growth. That's the word coming in. Of course, a hefty dividend as well, 50 rupees per share is what they've announced, and all of that is auguring well for that stock. Naresh, if we can do a quick chart check on AkzoNobel as well as Schneider and Praj Industries, because all of these stocks are fairly excited in the trading session.
So AkzoNobel has been, say, an exception in the whole sector. When we look at the rest of the sector, they are at 3-month, 6-month lows. AkzoNobel was holding on really well. And now finding the stock has hit a new all-time high. So clearly an outperformer. Going forward, any dips back to 2,800 should be a buying opportunity. So the stock looks pretty promising post the numbers, large volumes today. But would wait for any dips going forward as a buy. Schneider, again, the stock has been doing higher tops and higher bottoms right from the last 1 year roughly. So still a positive trade, but difficult to take a trade here given the risk reward is not great. But the trend is strong, continue to on a ride. Praj is something which I would avoid. It looks like a one-day move. It's seen a strong drift over the last 1 month. So that would be an avoid.
An avoid, seen a meaningful move already. And that's pretty much it. The rationale coming in from Investec as well, which has actually downgraded BSE from its earlier buy to now hold, stating that they see limited upside potential. The stocks were a blowout set, but the stock is almost down 3.5% to, I think, 4% in trade right now. But Anshul, just to the point of some of these capital market plays, be it exchanges, be it AMCs, etc., anything of interest you find?
Aisha, the makeup that we have in our investing style is that we don't like to chase stocks which have already built in good things that are happening to them in the markets. Most of these plays have built in significant upsides because of earnings upgrades. Of course, there are some high quality companies within this space which have done very well. But it is not our style to really chase stocks which have rallied so much. And I would, in fact, through you, urge your viewers also not to do too much of that. I mean, Aate mein namak type, okay, that's all right. But, to have all your large investments in pockets which are running ahead is really not the best way to go. And I must say that this market has still many unlocked segments where opportunity resides. So look for those segments rather than chasing stocks which have already done very well and where valuations have caught up with earnings growth and upgrades.
You wouldn't want to give us that list, would you, before we let you go? Where is it that you find value on the table right now?
Let's talk after this call.
Right, okay, we'll let you go on that note. Good speaking with you as always.
Always a pleasure. Always a pleasure.
Okay, Petronet LNG, that's the one which is holding out in trade. Metropolis, BPCL, Ipca Labs, OFSS. These are some of the names which are flying high. Technology, of course, as a basket is looking smart, as are some of the insurance plays, with HDFC Life leading with a near 5% move as we speak right now. We'll take a very quick break. When we come back, the last lap of today's trade. Back with closing trades right here in ET now. Crompton under pressure, BOB under pressure, City Union Bank under pressure, L&T Finance, Power Grid, both those stocks as well, lower by about 2%. But that's just one end of the market, wherein large part of the financials and banks are down. The index is still holding up 187 odd points up in the green, and we are just about 10 odd points away actually on the futures from that 22K mark. SAIL has now surged 7%. You've got a Petronet LNG, which we just flagged off earlier today or earlier in the show, 7% higher there as well. BPCL on a tear, over a 6% move on the futures. Ipca Labs holding up 6.25%. The entire tech basket looking very strong. Maruti has made a very decent move as well today, a good 4% traction. And L&T now also is sitting at the high point of the day. And the surprise mover today has got to be UPL. Even though the earnings, the commentary, did indicate that a recovery is still miles away. The stock did get beaten down, but today it's holding up 2.5% as we speak. But let's just try and analyze some of these other movers as well in trade. And Naresh, you've been tracking Reliance Industries pretty closely, right? It's not been a very consistent move. One up day, one down day. While directionally, of course, it may be headed higher. What next do you foresee on the immediate term?
So the stock gave a clean breakout above that 2650 mark, did a retest of it. Then we went to 2950. And there has to be some bit of a resistance around that round figure mark of 3000. But overall, the structure is very clear, new all-time highs and the leader in the whole heavyweight space. So out here, 2800, 2850 becomes a buy on dips, a stop below 2750. And the next, we could head up towards 3200 slowly and steadily. So positive on Reliance Industries as such, and looking at it as a buy on dip category stock.
One name which is catching attention is Indiabull Real Estate. After a very long time, we are looking at a big move coming in out there. Kunal, can you check the charts? Is it a breakout backed by volumes?
Yeah, I think it's a very strong breakout for Indiabull's Real Estate. So even though the volumes is a tad bit less as compared to the last time when the stock had seen a breakout, that was when a stock moved from 85 to 90 in the month of December. I think it was the first week of the month of December. But I think these are the kind of volume days which you require when a stock moves or shifts into a range. So typically when a stock moves into an uptrend, when it comes out major multi-year correction, the initial move happens in transitions where the stock moves say by a margin of 10%, 15% depending on the beta of the stock on the back of some higher volumes. Once the stock gets into a free-flowing zone, that's where you see the momentum accelerating for stocks. And just on the back of lower volumes, you see the stock moving up by a margin of 10, 15, 20% also in a short span of time. So I believe that Indiabull's real estate is now going through that first phase of transition. My sense is that the breakout of our 120, 125 mark should probably try and catapult towards the second phase of the transition for the stock. I believe traders should look at buying the stock even at current levels because of the backing the stock has got in terms of the volumes over the last 2 months. I would expect the stock to head towards even 140 to 150 possibly in the next 6 to 9 months.
Okay, point taken. Pull up the intraday chart of JK Tyre because the numbers are just out and it looks like it's a handsome beat as far as the earnings are concerned of the company. The revenue has been pretty much around the flat level, but the profitability does seem that it has improved materially. So the profitability has come in at 220 crores and that compares with just 65 crore rupees last year, and that is why you're seeing a sharp jump as far as JK Tyre is concerned. So a 3% spike there. Kunal, if I can come to you on the charts of JK Tyre, and the other ones I want to discuss with you are Paytm and PB Fintech. Is there any merit in trying to bottom fish on these two names?
So, I've always believed first that when a fall gets arrested, such a sharp fall gets arrested, that's the first time when the markets are pricing that maybe 400 to 450 range could actually be a good pivot support for Paytm. What generally happens over the successive next couple of days is that the stock remains to be a lot more volatile, but then ideally it would probably hang around to this 400 to 450 mark. Now, what we typically look out for is volume patterns change. So, for example, the volumes over the last 3 days, 4 days of the price correction were extremely low. Today, since the circuit has opened up, the volumes should be exceptionally high. If in the next couple of days, the prices settle into this range around the 400, 450 mark, and the volumes also increase up higher, that's a sign of buyers coming back. And I think that could probably add to more stability to Paytm. So I would probably watch out for the volume figure, but yes, in terms of prices, it indicates that the stability should come back to the stock pretty soon. JK Tyre, on the other hand, I think the tyre stocks are going through an exceptional uptrend, strong volumes for many of the larger cap tyre names, even though JK Tyre has moved on a bit of lower volumes, but nevertheless the trends are also strong for this name. So maybe keeping a trailing stop loss of 485 to 490, traders could hold on to their long positions.
So it's official now. The Petronet LNG announcement just came up on your screen that they have finally gone ahead and signed that LNG supply deal with Qatar. But Nuresh, I'd like to check out the charts of PTC Industries with you. Just 3 weeks back, they signed an arrangement with Dassault for purchases of certain products. The stock is moving gradually higher. It was 7,200 around that 3 weeks back. Now 8% up move. What do you make of the charts?
So this is a tough chart to look at because it's generally a stock which goes on circuits. As such, the liquidity is not great, but the trend has been up one way for the last few months. And also, it's one of the biggest multi-baggers if you look at it from the COVID lows as such. So out here at current levels, it's tough to take a call. It's a large company, but the float is still pretty low. So if one has a holding, continue to hold, but not a buy at current levels.
Coming in as far as PTC Industries are concerned, in terms of the other stocks which has just made a bit of a move in the last few minutes, let's take stock of that. So Yes Bank is one stock that continues to move higher. SAIL is the other one from the metal pack which is doing okay. NBCC, Punjab Sind Bank, IOBS, some of the other names which are perking up. But Britannia is one stock which is going weak into its earnings. It's down about 2% and the numbers from the entire FMCG space haven't been very impressive. Tomorrow, of course, will be Nestle as well as Tata Consumer, so we'll watch out for that also. But before all of that, let me take it across to Vinny to get a sense as to what the expectations are from Britannia this time. Vinny? Okay, so we'll try and pull up those, we'll try and get Vinny online to talk to us about those expectations. But Nuresh, as far as this entire sector is concerned, FMCG, if you already have positions, would you recommend people to book out and just churn their positions into other sectors which are showing larger amount of gains? Or there is, it's time now that perhaps FMCG will turn too?
So I would be watching out for the sector, not looking to exit. But if you look at FMCG as a pack, there is a lot of difference in terms of chart structure. So if you look at a Godrej Consumer, the stock has hit new all-time highs. And if you look at a HUL, the stock has gone nowhere for last almost 4 years now. Right. Same is the case when you go look at Tata Consumer, new all-time highs. The stock is up 30% over the last few months. So the structures are very different in FMCG, but out here looks like a lot of these names you cannot be selling out here because the returns have been flat from pre-COVID till now. So if you look at a Dabur, the stock used to be 500. pre-COVID as well as in 2018 was closer to 450. The stock today is just at 550. So in this case, it's a good place to be looking out for a reversal eventually someday. So a defensive sector to watch out for, not a sell at current levels, not a shift, but going forward, maybe 3 months down the line, you could actually see a revival in a lot of these names which have gone flat for the last 3-4 years.
That's the take coming in on which way the Nifty FMCG index is heading. Today, of course, once again, it's the oil and gas sector which is actually leading. There's technology as well. Telecom not looking bad at all. Metals are doing okay. I mean, if you were to look at it, power, FMCG, media and banks are the only ones which are the relative underperformers. Banks, of course, in the red, well into the red. But the rest of the market is looking quite okay. Kunal, what within pharmaceutical do you think is attractive to trade on right now?
See, large cap names like Cipla, Sun Pharma, Lupin, they are attractive. They are more consistent. So, the risk reward is attractive. You can buy with, these stocks with a very nominal kind of a trailing stop loss. But I think if you look at the, the slight high beta names, then I would probably recommend two stocks. And, they pop up on the chart in terms of a very strong possible breakout of a major multi-year correction. One of them is Gland Pharma, the stock which has been recovering quite well from the 3-digit mark. I think 850, 900 was the low for the stock in the start of the previous year. It's now come back towards 2000 plus levels. Looks attractive. That Gland Pharma is stabilizing at the 2000 plus mark. So I would believe that that's a strong sign that a new trend is emerging for the stock, and at least the major downtrend the stock has seen over the last 2 years, that's getting arrested. The other name is Biocon, and I think over the last many weeks we've seen some exceptional activity in terms of the F&O side for Biocon, where there has been a very strong price recovery from sub 200 levels to now on the verge or just about the 300 mark. And the volumes have been more strong for the stock. The open interest built up has been exceptional when the stock has moved up higher. That I believe could probably be another reason why one could be looking out for these names, other than the performing and the larger cap names like Sun Pharma, Cipla, Lupin, etc.
In fact, Biocon crossing 300 mark is a multi-year high, if I'm not wrong. Several years back, it used to be that price. It did not cross it. The range was 220 to 280.
Correct. That was.
It's gone closer to 300 mark is a multi-year high. At the highest ever record high, it used to be 500, 600. But also, we broke a story just a week back, just to remind our viewers that the management, who's eager to cut the debt levels right now, may be showcasing to the businesses, to a clutch of private equity guys. One is some stake sale in Syngene is possible, and the other is biosimilar deal. So if that actually happens, then the debt component for Biocon, one of the few companies which have debt now, Glenmark has eased their debt a lot, would actually be cleared, and hence that's the view on the market. In fact, we broke that story. So if any announcement, tomorrow is the result, by the way, Biocon. So ahead of the result is getting excited, and any announcement of that part could spark a rally out there. We'll take a short break, come back with more news and analysis. Gurmeet Chadda would be back, would also be there on the show. Don't go anywhere. All right, so let's get you some latest coming in as far as insurance sector is concerned. My colleague Anurag Shah is joining us with exclusive details of what the standing committee recommendations are. Anurag, tell us.
So hope of reduction in GST on health insurance has again picked up the momentum, and standing committee on finance has suggested about the reduction on GST on health insurance premium. So presently on health insurance premium, the GST rate is of 18%. And there is a demand from health insurance companies, healthcare provider to reduce this GST from 18% to 12%. And now the standing committee is also saying this because the new data which suggests that the health insurance premium is growing more than 20% continuously from last 2 years. In health insurance sector, there is a growth of 20%. And now health insurance sector has become a biggest market segment with around 39 to 40% market share of overall non-life insurance industry. So these are the data which are supporting for the reduction in health insurance, GST on health insurance, because after reduction also there will be no loss to government in the form of revenue. So the demand for reduction on health insurance GST has picked up again. where the standing committee has also suggested to reduce it from 18% to 12%, and this matter is likely to be taken up in the GST Council meeting, which has not happened post recent 5 state elections.
Take a look at the rally on the likes of ICICI Lombard, ICICI Pru Life, even HDFC Life for that matter, and the other entire insurance space companies, even New India Assurance for that matter. All of these stocks are actually seeing a bit of a spike, and of late the noises around insurance have been more positive rather than negative. So that's the case. We are seeing a bit of a momentum there. But Gurmeet Chadha joins us on the show now. Gurmeet, wanted to begin by discussing the IT pack with you. If you purely go by the commentary or the earnings of Q3, there was nothing to get the street excited. But I don't know if this is a case that a bottom has been made and finally the street is believing that.
Yeah, I think bit of value hunting and also the fact that the markets are forward looking. They probably believe that the worst in terms of IT is probably behind it. So there's some rub off, with the movement in Nasdaq also with the big tech moving. But I still think valuations are now stretched. There was a lot of value when we were getting Infosys at 1200, Tech Mahindra, HCL at 1000 odd, at 12, 13 times earnings, Infosys at 16 times. But now the valuations are more towards higher side, which is around 25, 30 times in most names, barring maybe HCL Tech still, I think with the kind of guidance is still a little more reasonable. Even in mid-cap IT, you're paying a very high multiple for good names like Persistent or Cyient or even KPIT. So I think a lot of valuation comfort is not there. It was the case. So it's as they say that you should differentiate if the problem is structural or temporary. And I think the problem was temporary in IT, and people who probably were patient have been rewarded. I think rotation will happen. I think similarly now, I think everybody's writing off chemicals, right? Again, the problem in my view is still temporary, but the temporary may last for a few quarters. So I think this sector rotation happening. I don't see much valuation comfort right now.
Gurmeet, hi, afternoon. I know you've been a strong believer and investor in the private banking names. Would you say it's time to value hunt, add more on the current decline and underperformance that one is seeing, or would you say steer clear, better opportunities clearly in the market?
No, there are clearly opportunities. I think it's not every time you get leading private banks at two book value and 14 to 16 times earnings. Most of them, right? You pick Axis, HDFC. I think ICICI for the first time is now trading at a higher valuation than HDFC. If you take FY25 core price to book, some of the PSU banks like SBI again one book value 9 times. Bank of Baroda probably 7 times. So I think there is definitely value. I think, but the key concern is that you probably need 1 quarter of bottoming out of NIMs. So I think the key trigger could be once the rate cut starts, probably maybe closer to H2, which is May, June, in my view. And cost of borrowings also come down as yields fall. For the near term, I think the treasury gains will support any compression in NIM in my view. So I think there's definitely value. Also, see, last 1 year, Nifty is up 20%, BankX is hardly up 11%. So in my view, some rotation will happen. Thirdly, non-financials, we are more constructive. I think the way we are adding 25 lakh new investors every month in capital markets. So, the depository, the RTA agents, the AMCs, I think those are, in my view, better play and probably more structural and more asset light vis-a-vis some of the other financials. NBFC and banks, in my view, you possibly have to wait it out till the rate cut starts.
You about Paytm. Although today you've seen some bottom fishing happening, there's been a sizable 1.5% equity which changed hands as well, a block deal earlier today. But would you say wait it out, let the bridge flow under the water and then take a call?
I see anything to do with regulator, especially on compliance. I think right now what you're doing is speculation. It is not investing because you don't know how deep is the concern RBI. As RBI usually doesn't take such stringent actions. Now, if assuming, let's say, if the payment by glasses goes, it has a huge impact on the other businesses as well, right? So I think we should wait it out because some of the concerns raised in terms of onboarding, in terms of KYC, single PAN being used for multiple accounts raises concerns, on compliance and supervision level. So I think we should wait it out. I think there are better opportunities in the market, and acting when there is regulatory action impending is, as I said earlier, is speculation. So I would avoid till more clarity comes. Yes, of course, it has fallen. It's at all-time low. But in these things, you don't know, what the bottom is, especially when it comes to regulatory action.
Okay, but as promised, it is Britannia that the street is expecting numbers for. So let's take it across to Vinny to get a sense of the expectations. Vinny.
So absolutely, in terms of numbers that one could expect from Britannia, muted growth in terms of revenue as well. Only a 2% growth in terms of revenue is what we're expecting. And obviously because of that also volumes are expected to be flattish as well. 0 to 2% is what is the volume growth as one could expect. Now let's not forget factors that are impacting the numbers or the company overall at the FMCG pack is rural slowdown. That's an important one because that's not seen a pickup as well. Other than that, Britannia has been focusing in terms of increasing the distribution through the rural areas, and that is one factor that is furthermore impacting their growth trajectory as well. Competitive intensity, that's been continuing from regional players since inflation is coming down as well. So yes, that's something that could be weighing on the volumes, and obviously while we're seeing grammage increase, that is something that is maybe supporting a bit of the volume growth. So let's keep an eye out on in terms of the volume number. Other than that, when you're looking at it in terms of the margins of the company, expected to see a decline. High base is one of the factors. Other than that, in terms of the higher ad spends, that's something that is impacting the EBITDA margins of the company as well. So yes, all in all, let's watch out for the margins because that is expected to contract by around 100 basis points as well. So key factors to watch out for in terms of commentary, in terms of rural, how is the inflation shaping up in terms of the raw material costs, and adjacency performances are key factors to watch out for.
Right, and Vinny, give us some color on what the urban consumption trend could be. What's Nestle likely to report?
So overall, in terms of the segments that have been doing well in the FMCG pack is the food and beverage segment, and that's where a major part of Nestle's business comes in from as well. So that has been doing well, and that is why Nestle is expected to see a growth of around 9.9 to 10% is what you could say, a double-digit growth, much better than what we have seen for other FMCG companies. Other than that, profit is also expected to see a growth of 16%, margins and expansion of 170 basis points as well. Now overall volume growth, that's expected at around 5% for the company, and like I mentioned, food and beverage overall as a segment is doing quite well during the quarter, and that is what will be supporting the numbers of Nestle in the December quarter. Strong double-digit growth is what we're expecting in the domestic business, mainly driven by chocolates, confectioneries as well as the nutrition business. They're expecting higher competition is what one could expect in terms of out-of-home consumption for Nestle, and deflation in edible oils, wheat, packaging as well as dairy prices and operating leverage is something that will be aiding the margins of the company. So yes, let's keep an eye out on commentary in terms of rural demand, in terms of the milk and nutrition segment, and pipeline in terms of new product launches are key factors to watch out for from Nestle.
Okay, point taken. So that's the expectation from Nestle this time around, as well as what to expect from Britannia. But in terms of the market mood, well, actually today we've managed to hold on. There hasn't been that last hour sellout that we were witnessing for the last couple of days. In fact, we're ending close to the highest point of the trading session, 21,940. Last 1.5 minutes left. So let me take it quickly across to Gurmeet for one last question. Gurmeet, on telecom. With the Airtel's earnings, is it a fair case to look at that sector again?
It's already done very well. I think it's now more a 2.5 pair industry. We are seeing ARPUs now above 200. I think one good thing which I liked on the commentary is the capex next year could be slightly lower levels, which means free cash flow generation and some balance sheet improvement. I think Airtel has been prepaying also. So I think it's a great play on the digital infra, almost a duopoly kind of a situation. And with 40 crore plus kind of subscribers, if ARPU goes up another 10% from these levels, you probably will start generating more cash flows and a reduction in debt. So you'll get both operating as well as financial leverage playing out. So it's one of our core portfolio stock, pretty constructive.
We'll let you go. Good to chat with you as always. Let's begin winding up for the day while we are definitely closing in at the high point of the day. It was really oil and gas all the way, and technology which has seen the big moves. BPCL goes home with a 6.5% gain, TCS up 4%, ONGC up another 4%, HCL, Wipro, L&T, Infosys, Bharti, Tata Steel have all been some of the significant outperformers. There's also been good traction for Ipca Laboratories, for an OFSS, Petronet LNG, which finally closed in that deal with Qatar, and SAIL, which has managed to notch up about 7% in trade. Losers as well, so Britannia ahead of its numbers, down 2%, IndusInd Bank has fallen nearly 2%, Axis Kotak have both fallen about almost 1% or so. Bajaj Finance hasn't seen any meaningful recovery after its numbers. That as well has ebbed off today. Reliance didn't quite participate in today's move. That was also a drag, and so was the case with IDC. But tomorrow's another day. We'll pick it up again tomorrow morning at 8 a.m.